and let's talk about advanced ranges. And the first way we're going to break down ranges is it's important to realize everything is always constantly in a range. Ranges control everything in our chart. So I don't want to say ranges control everything, but ranges and the way that they work control pretty much the majority of whether you move up or down on a chart. Like if you're going to move up in a big way, or you're going to move down in a big way, or whether you're going to stay in a Pandora's box or a mirror, ranges is how everything is controlled. So really understanding that we have ranges on our chart that are everywhere. And let me get to my shade too. Here it is. But we want the square shape. Hold on a second. You can tell I never use any of these other tools because I actually don't even know where anything is here. It should be in this one, rectangle. So like we have ranges on our charts and they are everywhere. So I'm just going to start by drawing out a few ranges on our chart to just understand the flow. So everybody's, at the same point, in this moment. And I'm going to do this with the replayer tool, just as a good preset to working it. In this moment here, this was the interior range, and then the exterior range exists somewhere from here all the way down to the very bottom of the chart. And everything is ranges with inside of ranges with inside of ranges. So really understanding, and for the very first part of advanced ranges is really drawing those boxes in your mind, or just seeing them on the charts and understanding where those ranges exist. Like if this range breaks, it's simply going to go to the next range, right? And that next range we just dictated as from back here, from this here. And so fine, that's whatever this hits an inverse hold level or whatever it hits. And then it creates a new range where its new range looks something like this. You've got the bottom of this range here is now expanding up here. So this range has expanded, and then you'd have some kind of interior range that would be interior moments from, say, break levels to break levels. So stuff like that. And then so you have two ranges in this chart. You have the range that'll break up. This range tested the range in the back, and you have the part of the move that can hold. So like you just get into this cycle of, and you can see it right there. It hits within the range perfectly because that's exactly where the break level would be, and yada, yada, yada. And you can see this one should actually be moved up a bit to that wick, but you can see where, if you understand ranges, you understand where the tops and bottoms of things are. So that by understanding ranges, you automatically start doing things like creating polarity, and you automatically start doing things like creating the spots where knife catches exist. And you get a lot of stuff like that happens. And then, you'd have another pseudo range here that develops. Looks like it would be some kind of trend here to trend there. So I'm assuming the range is going to be about this big, because the range I'm thinking is going to be like something like this, right? So then you have, ranges inside of ranges, and obviously that breaks. So then, your range is, building up here, and you're still in the same range. And we're just going to leave that because really you're just breaking over the move, and there you pop the move right there. So you can see where like the range acts as knife catch polarity, because again, that's where probably would have knife caught a little 1 minute hold level, and then you would have had your profits back test the trend, moves up, breaks its range, moves to the next range. And that range is whatever, somewhere back here, some kind of a backside hold level, or whatever it is. We could waste time going through this chart and finding the exact level, but for wherever this is, it doesn't really matter. The most important thing here is understanding the ranges, and then really like this range here goes from here. And it's not that the range is adapting, like ranges do adapt, but I'm just using the same boxes to draw them. Something like from here to here would be one range, and then your secondary range in this would be something from like the bottom of wherever that is to some kind of polarity in the move, which you don't have that interior range. Maybe you do. Maybe you have something like this here, and bottom of polarity to something like the break of the move right there, something that would break the interior point of this move, something like this. And so like really, when you're drawing these red boxes, imagine the top and bottom of these ranges are your points of polarity, right? And so then you're getting over this polarity, and you're starting to move up, and then just keep letting this play through. And there's the bottom of that range, and then it breaks that range, and it goes back to our original range that we actually had a little while. Oopsies, no, we don't want to cancel that. It goes back to our original range, which we had a little while ago. If we just Control Z, right back to the this part of this range here. So now this range, you're something like this. So it's really about defining polarity points and understanding where something can go, because when you do that, you really get the base of your move and everything that you're looking for in these moves. And so you're just going to let this keep playing out, and that's that. So the understanding of ranges is to know that you are stuck in these areas where and then even right now, like this range would be something like that there to the bottom of something like this here, right? Like you've got a range there. You've got the larger range that is existing from this to the top of that, and then you're going to have smaller ranges inside of here. Something where you have, I don't know, some type of, is that it for the replay tool? Yeah, that's it for the replay tool. Something where you have trends that dictate things, right? Now you're getting into like what can break your ranges and in the spots that your ranges exist. So this really shows you, um, like understanding ranges really shows you where something is going to go next. Like if you break above this, you're going either back up to this range or to the level that would break, the levels that would hold this trade down. So it's about understanding polarity, and then to really get into advanced ranges, you really have to know which trends are breaking which ranges and which levels are breaking which ranges. So that just kind of flows over into the next thing about trends and levels. So we're going to do kind of like a quick trend recap here, on what trends do, and kind of how they control this and everything. And that's really an important word there, is the controller, or what controls it. Having that, what controls my move. We're just going to leave these range boxes up. Actually, we're going to move them out of the way and we're going to leave them up. And what I'm going to do is I'm just going to change all my levels. I'm going to do something I don't typically do. I'm going to go like this, and I am going to use only white levels here. So like I'm just going to use, and then I'm just going to delete this green one. It's just kind of in the way. It's this here. And we're going to go time frame neutral for a moment here. And we can already see this 15-minute tested. So we're going to leave that there because we do want to build some architecture off of that 15-minute. So, we're gonna leave that there. We're gonna leave that 15-minute there temporarily, and let's just continue just changing everything to white, or just go here, change this to white, go here. That was a reverse level that got hit. That's fine. We just gonna delete that. I'll change this one to white, and really just kind of understanding that there's going to be certain points, and everything we're going to use is white for this example. Really understanding like what's going to break this move. So we really want to start at the highest time frame here and just start marking out the important events, because obviously you've got the top of the range, and that's polarity. So regardless of this being whatever level, or whatever information that is, we're not concerned about that right now. And then same on the bottom side, like let's just delete this level here. Let's delete this here. Let's delete that there. Let's delete here. Let's delete that there. We can just kind of get rid of all the information that we have. And you've got white here, right? And that's your more global piece of this. And then for this, I am going to see highest time frame I have on this wick is a 1 hour. So what I want to do actually is I want to go back and find level that was tested, highest time frame trend we can make off. So this is, oh, of course. There we go. Just a little hack to get the time frames there so that we can pull them up. So this is, you've got some type of polarity here, right? Like you've got, if I zoom in here, I believe that's a blue candle, and you've got some type of polarity here. Don't believe. We're going to mark both of these actually. We're going to go, that's just a single candle, so we don't use that. That's never tested. That's part of the next range. And so what we're going to do is we're actually going to go, we're going to put this as a dotted line, just to indicate that this is part of the next range for us. And then let's go back to the front of the chart here, take the replayer tool off. Wait a second. No, we need to draw a trend. That's the one thing I forgot to do. So I really want to just kind of, nice time frame here. Want to make sure that snapped to the right spot. Take the replayer tool off. And so if you ever need to go on TradingView and get the replayer tool to give you further back time frames, you can simply just go and use the replayer tool on the time frame and cut it off like that, and you'll be able to do that. So just a little quick trick. So you really have a range that's defined here, right? Like this is your range trend for the range. In order to get to this next range, which exists up here, you have to break this range trend, and it's on the hourly time frame. So now at least you have something on the top. So this is the controller of the top of the move, and then you've got the controller of the bottom of the move down here. So now all things white, I am going to change this one to red because we know this is a daily. I'm going to change this to red, and I am going to change this to blue because we know that's an hourly, because these time frames are going to be important. But at least now we have, let's just delete that. Let's skip. We're going to keep that one. We're going to keep those ones. Keep those. Okay, that's fine. We're not going to worry about those levels up there. So now at least we have something where we can see, in order to get back down to this range, you have to break this trend. In order to get to the next range up, you have to break this. And then when you're looking at this on the hourly here, you could simply go and start making some of these trends here. And, you could probably see how this is cycling through, and it broke here to here. Come on. To there, and then now to here, right? Now you've got something like this. And if we zoom in, we can really see where, oopsies, we got to go here. You can really see that, even if that's fine, you walk it back, you're going to end up in the same. It's all the same. Like this is too sharp of an angle to, like, even if you were to walk it to here, it's still hard closes here, which is fine. So you can really see that, like, what's trying to happen here is you have your hourly controller on top. You've got, this is controlling the ability to get into the higher parts of drawing tool should be here. Yes. So I'm going to go to a 4-hour to illustrate this. This trend here is really controlling the ability to go back up to here. And then this trend here is controlling the ability to get to these higher levels up here, up at that 52K mark. So really these ranges are controlling the entirety of the move. And then same thing on the bottom. So, right now you're just simply trying to create a cycle, and seeing these ranges and where they exist, it's pretty important, because you can even see right here, like, this trend is just cycling perfectly, trying to break its move, trying to have that, move past it. It's being held down by this hold level, which, I'm not really sure what time frame this hold level is on. You've got a hold level here. I'm sure you have other stuff going on here. You got 15-minute that was tested, and then maybe now you're on a 15-minute trail. So like something like this was tested, and you're holding this, and the next one is going to be here as a reverse. So you really also do get the definement when you start identifying ranges and pinning them to timeframes. You really do get the definement of what would be the next time frame, right? Because if you're on the hourly, it's not like you're going to look for 1-minute timeframes or 3-minute timeframes. You're at best looking for 4-hour timeframes, because your 4-hour timeframe would start to indicate the move is breaking. So a couple ways this range can break, this move can break. It's the 4-hour, right? Or it's the building up on the other side. And then so really then you just have your stuff. Like what we're gonna do is we're gonna color this one blue and make it an origin, because we really need to see if there's any 4-hour levels starting to be broken here, right? So then you've got this. I'm not gonna go back further than this. That's fine. I'm happy with this. I want to see what's happening underneath this trend. Hence why I'm not going to use anything different here. And do you have anything else? You have a 4-hour time right here, origin level right here. You've got this hourly holding it down. And really this is going to be useless, because at this point where this is continuously rejecting along with trend, you're going to break trend anyways and go to the next hourly. So you're not, outside of it being something extremely locally, you're not really doing anything. And this would have to hit and reject again and pull back. But by that time, I think your trend is so aggressive here that you're never going to run into a scenario where you're breaking this 4-hour without breaking this trend, or any 4-hour on this chart. Actually, if I'm being honest, maybe this one right here. It's like but even then, again, you're going to be breaking the hourly, and you're going to be above that to go for the 4 hours. So really you'd have to be something like get below this backside, come straight back up over and close in here. This trend is just too aggressive to show that. So that would be one way that we could see this breaking. The other way is that if 15-minute timeframes don't start holding it up, but you've got your 15 minutes are holding the move. So you've got this one right here, which tests perfectly. You go down to your next one here, it's testing perfectly here and here. So you can just kind of skip forward to your next reverse level here, and you've got your hourlies or your 15 minutes holding. So you have got everything you kind of need here to show you that this move is still going down. Anyways, on the top side, without looking at the bottom, this is how you would see if the range is breaking. And again, it's really important to define kind of where the range is as step number one, and step number two, what's controlling that range. And from the top, we saw that was the hourly, but that's really how you have to walk it through. And then step number three, so if you were to do almost like a playbook on this, step number one, identify where the range is. Step number two, see what time frame controls it. Step number three, start marking your levels to see if that range is still holding down. So like we've done our work on the top side. We know that this is going to break when the hourly breaks, the range is going to snap, it's going to move up. This could cycle once or twice more, but eventually you'll have the timeframes built on the bottom to see when this cycle is going to snap and not hold, because then you get into the question of, okay, well, when does this trend cycle versus when does it just snap through and it's no longer a cycle, it just breaks its move. So that's all things for trends and ranges from this top side. There's nothing else here that I would like to look at. It was pretty easy to pinpoint what this range was, and how I did that so fast is I simply looked at this range being attacked here, and so this is something that it's right now, and then what's protecting the next range from being attacked, and then it's the same thing on the bottom. This range on the bottom is being protected by this trend, just like this range on the top is being protected by now this trend, right? You've tested this level. This range is now part of where you are. So that's fine. You can expand it here. Doesn't make any difference, but that's the range you're in now. So now on the bigger scale of things, you're now here stuck inside of a smaller range that's being protecting this range, and then down here protecting that range. And then, whichever way this goes, if you break down, then your range would be something like, the top of, well, okay, fine. We can actually just move this box. If you were to break this range down, then your range would be something like this, right? And then you'd have a pseudo range in there to get back up to this range or down to the next range below. So you're really just working through with your ranges and seeing how they can hold and how they can break. And so like this, work on the bottom side now too, and see, we already have this 4 hour, this daily trend. So we already know that this is kind of the controller. We can delete that. This is the controller to this range, what's protecting it. And so it was hit perfectly. Just like you would expect this hourly range to likely be hit again if you go back up there. Like you're playing range against range. Oopsies. And even right now, if you were to move up, you still got that up there, and then it would be protected by the bottom of this range. Or I don't think you would actually, at this point, you've got this kind of 4 hour untested level here. I really don't think you would go and come up here and then all of a sudden go down here, because the reality is then you'd be breaking the range trend and you'd be exposing this range. Could you cycle this range like you are cycling this? Yeah, of course you can. So if this range ends up holding again, then this range is still protected if this part of the move holds, right? But then you're asking that part of the move to hold on a time frame below, which would just indicate that the top side of your chart is breaking, because you lost a daily, and I believe this is a 4 hour. Oh, it's actually a daily as well. So you actually have a daily here. That's fine. You'd be the range trend is still all the same. In order to get to this range, you have to break this range trend. So then all that would happen is you would just cycle it to oopsies. You would just cycle it to some test out here, and then it would just become a cycle trend. And you end up building ranges, and this breaks and loses, and then eventually this range gets exposed. So that's really the thing, is that these trends, they protect ranges. That's why we call them range trends, right? That's why we call them range trends, because range trends, they protect ranges, and ranges can't be attacked until range trends are broken. And just by kind of common sense, like if you were to come up to this point in the chart, at some point you're going to cross over at an angle. It's just what's creating that angle and what's controlling that angle. It doesn't matter where it comes from. There's going to be some type of angle that protects it, right? Some type of trend that gets respected. And when that trend is broken, there's nothing left. That range becomes a naked range. And then it just has the ability to free fly into it, right? So then you look at the bottom side of your chart, and now you have a daily. So now you're doing the same thing on the bottom side of the chart. You're using 4 hour information to kind of hold you up. You hit a daily, you've got a 4 hour break level here. Like, yeah, you've got to get over top of this 4 hour level in order to have that happen. And then so I believe this one here was a daily backside. It got hit perfectly. It went through it. It back tested something inside of this, and then it hit this range. And then something important that was said a little earlier was that you can still create a range trend off of this right here. So this range, before it breaks, will likely create something here, and it might have already created it. So like you've got this here, but that doesn't mean it can't cycle and have one more break, because this is underneath a test. You can cycle this, but right now you've got this protecting this range as well, right? So now you're in this question of, okay, well, you've got daily information here. Now you need 4 hour information to hold it up. I would simply just delete this. Don't feel like it can hold again. Well, it can actually hold again. That's not true. It actually can hold again, and you would just cycle this, but it's not a spot where I would take a buy on my trade. Like once this broke, I would be more looking towards the bottom of this range or lower. So like if this holds, that's kind of what you're looking at. So now you start doing the work on the other side. You've got a 4 hour level here. So like let's start coloring these in. So now you've got a daily level, right? You go past this daily level. The 4 hours a perfect buy here. Like it's just literally the perfect buy. You've got a daily level holding, deep diving, the combo level to the 4, and like it's picture perfect. Is you cannot, like this is just so picture perfect. Like trend gets created off of the test of the time frame that would hold it up. It's literally picture perfect. And then you see how how insanely close it gets to price. 42 182, and what price does it go to? 42 176 within $6 or $7. Like that's 186, yeah, within 6.5 $7, something like that. And it's like it's picture perfect. It's picture perfect. And now when you look at this, you've got a 4 hour with a daily range trend attacking the one. You go down to the 1 hour. Do we have 1 hour time frames holding, or is this just still going after these 4 hour levels? Well, let's take a look. I wouldn't presume to say it's going after 4 hour levels. You hit that there. This actually hard closed, held the trend. So your hourly trail is actually kind of broken. Like you would have really wanted to see, if this range was going to hold, you would have wanted to see that kind of develop and build up, not break the move to hold that, because you broke that to test the 4 hours. So in a way, your 4 hours kind of useless now, because this should have targeted the 4. It doesn't target the 4. There's not really anything left protecting that 4 hour level. So this can't hold the move. So I would say you delete this off your chart, because if you have your hourly here and your 4 hour below it, here, let's draw this out. If you have your hourly here, right, which is supposed to be the backside daily test that went back to right here. So that's the backside. And let's color that so we actually don't make a mistake here. So you got a daily, a 4 hour, a 1 hour. The 1 hour is no longer reliable or usable. And for that reason, I would not use this 4. I would say that once this 1 hour breaks, because that trail of 4 to 1 is still there. But now, once this breaks, it's not like you can fall back and say, oh, we have an untested 4 hours. You're going to kind of separate timeframes here and gap, because now you don't have something where you say, we have a daily, it created a 4, it created a 1, next is the 15. It's kind of stigmatized itself and polarized itself now, because this trail where the 1 hour was supposed to hold off the 4, this trail has completely broken. It's already hard closed. So it's almost like you would delete this. However, because we still have an hourly as the next cue to hold this trade, you now only have an hourly and a daily before the range gets exposed, and you just move down to there. So now you just have that, and you just have hourly cues that probably have been holding the move. You've got an hourly here that held the move. These could even be 15s. Actually, you've got an hourly here. I guess we can clearly see it's an hourly in a reverse. But let's just also double check 15s just to see, if. And like, even if some stuff like this were to start holding the move, all that you have now is disconnected timeframes. Like you had a 4, it was supposed to be the 1 broke, you've got a 15 here. You have like a trail of reverse 15s anywhere. You have a 15 there. Well, actually it would be right here. So this would be the level that has to hold, because you've got this test here and it has to go here and test this. So that's then you've got that test there. That's tested there. Even if this reversed here, you've got this here, that's fine. It still tests this here, which still brings you to this point here on the 15. So you're really kind of starting to thin out your range here on the bottom side. So on the top side, you've got an hourly holding you down. And on the bottom side, you've got a range that's starting to thin out. Well, let's check the 5 minute just in case. So 15 broke, target's a 5. So now you've got also the 5 tested. So you're not creating this perfect trail where you had a 4 hour, you had a 1 hour, the 1 hour breaks, it hard closes, that's disconnected. All of a sudden, immediately you start disconnecting all these time frames. There's kind of like a big gap in this chart here now, where you've started to, I guess it's best to illustrate it with a pen here. I almost wish I could just change colors on the fly with a pen. I can, but it's just a lot of clicking. So we'll just explain it instead of color coding these, because then I'll have to switch back to the crosshair tool, the selector tool. And you've got a daily, that's fine. That tests, it creates here. That gives you a 4 hour, it creates here. You had a 1 hour somewhere in, I'm not quite sure where the 1 hour was. I believe it was, could have been in here as well. You've got a 1 hour here. Hard closes your 1 hour and creates a new 1 hour. So this area here is kind of where the time frames break, because it should have went daily for 1, and then it picks a time frame to continuously hold 1 hour, 1 hour, 1 hour, 1 hour. There's at some point a crossover to this 1 hour here, because you have a 1 hour level. There's got to be a crossover point where, and we've gone through this in the past, where you have a time frame that +1 -1's the other side. So on this side, like in order to break this, you would need 15-minute levels holding on the bottom side of the chart. So what you would expect is create a daily level, have the 4 hour bounce, create a 1 hour, have the 1 hour bounce, create a 15 hits, create a trail, 15 hits, create a trail, 15 hits, create a trail. Because you see that's connected to the range above, because now you've got a 1 hour time frame, which should be being held by either a 1 hour time frame on the bottom or a 4-hour time frame indicating it is moving down, or 15-minute time frames that continuously build and dictate that it's going up. So let's do that one more time because it's a bit of a tongue twister. Hourly on the top should either have 4 hours that this offsets and green lights it to move down. So if it's hitting 4-hour trail, 4-hour trail, 4-hour trail, it's being constantly offset by the 1 hour here. It's green lighting you that you're going to break down, because when one of those 4-hour breaks, it means this is in succession. And you've also got a scenario where you just build timeframes 4-hour, 1 hour, 15-minute, 5-minute, 3-minute, and eventually that breaks up, or it creates enough of a trail that it goes back and targets a 15, right? So then if you have 15-minute levels holding this, right, this green lights this to break, or down here that the 15-minute check marks it that it's in succession. So the 15-minute levels hold against this range and they break the range. In our scenario, or you create hourly trend to hourly trend or hourly level, and you're just literally Pandora's boxing. So like your range is very easy to decipher in terms of what can you actually see out of the range. So like we have the hourly here, we know that, and now 15 minutes need to hold, and if 15 minutes can continue to hold, it green lights this range to die, right? So that range gets greenlit to die. The problem we have with our range is that you have a daily, you have a 4, your 1 hour broke. So now your 4 hours exposed because it should have created that trail off the 1 hour. So with that 1 hour, now we have a 15 that's trying to hold this. You have a very polarized bottom part of the range here, for the simple fact that this trail that was supposed to be created from daily to 4 to 1 to 15, your 1 hour already broke, which means your 4-hour level is exposed. In order to get to any 4-hour level, you either have one of two things that can happen. You either have to start that trail all over again, and then then that's where you kind of get into Pandora's boxing mirroring stuff. You either have to start that trail all over again. So like if we go here and this 4 hours hit perfectly fine, but then the 1 hour closes underneath it, the only thing left you have now is this. You've got this 4 hours. So this has to hold now. So this is going to be in a constant state of holding. And if you go back and hold this level again, or maybe even like a 1 hour, find your 4-hour level. That's what I'm telling you. You guys know how to do that. Guys and girls, you know how to do that. Find your 4-hour level. This is going to be a little bit below trend. I believe the 1 hour had already hard closed here. So that's part of this problem, right? Like you've got, so let's just take a further look at this. You've got a 1 hour level here. You've got a 4-hour level here. Daily tests, 4-hour hits. You can still use this as the 1 hour trail. You can, because your 4-hour hits here. So you've hit a 4-hour level, you've hit another 4-hour level. So you've got two things happening. You've got an hourly here, and you've got a 4-hour combo inside of that. So that's where your range gets a lot of clarity, because now you have a 1 hour here, a 4-hour here, combo to the 1. And then so you're going to look at this trade and you're going to say, like, obviously this is probably the smarter trade. It looks like it's pretty damn deep in the range if you were to measure this. You've got, oh my God, dude. Okay, let's measure out here. You've got 47% or 78%, and then you've got this, the 30%, and you can just go in here and then start comboing. So then you use that reduction of error, and you start trimming down those percentages. Where can a combo level hit? Yeah, you can trim 9% off this in order to get to the base of that move. So now instead of measuring a 30% deficit, you're measuring out a 21% deficit. I believe it was 9%. You're measuring out a 21% deficit to that 15-minute level. Could you even combo it to the 5? Like, I'd maybe like to see one more 5-minute wick. Yeah, I don't know if it's worth it to 3 more percent to possibly miss the move. I would probably just go for the 15-minute wick here, and I wouldn't go anything past that, especially since the range is controlled by the hourly, and the 15-minute can offset it. So you could have a reverse level here at this 15 hitting perfectly again through the 1 hour. So like if I was going to go further in this move, this is where I would go to, and that's the reason as to why I would stop my combination trail there, and I wouldn't keep going down. Even at the hourly here at the wick, like it's quite a bit of difference between that 4-hour level. Like, do I even go for the wick? Yeah, probably. I don't think I go for the body. I think I choose a balancing point between the wick and the body of the hourly. Like if you were to go to mark that hourly body, I believe it's too low versus the potential to miss the move versus deep diving this target. Like you don't even combo at that point. Your combos are down here. So now your exposure to percentages, like, yeah, now all of a sudden you're here all the way down to here, 78%. There's nothing really left you can combo here. Even if you combo something even to the bottom, it's 26% to the very bottom, which is now a 4-hour break level, et cetera, et cetera. And who even knows what's back here? It could even be more. Actually, that is a 4-hour level already. So even prior to that, you're only 17%. So like at that point, I wouldn't be using this wick. There's no combos to it. I would simply be using the 15 there. The 15 wick I think is nice. And I think it offsets that range on the top side to show you that. So like that's your range, and you're seeing the time frames that need to control it. So when you look at ranges, really understanding the time frames and doing the correct TA will give you an immense amount of clarity, because all of this whole entire bottom side of this little assessment of the chart I did, which I feel like is pretty accurate on the range and the way it's being controlled. The whole bottom side of this assessment was simply built off the fact that this is a 1-hour trend. I made no decisions outside of, I just want to see what leads me to breaking a 1-hour trend up top. And I found that 1-hour trend fairly quickly, because it was the highest time frame from the next range. And you saw how I just kind of went back in time and just said, like, what's the highest point of this wick? What protects this range? Well, it's the hourly. And then you have the hourly right here to here. And that shows you that when the 15-minute levels start holding, like, this will break. And then you can even now engineer this 4-hour. And then if that was the case on the 4-hour here, because it did hit that 4-hour there, this is your next level. And then so you've got your hourly here, which was perfectly hit there, which is fine. And then we have the 15-minute, which is now hit here. I don't know why this is blue. It should be green. But and then all the same. You know, you've got your 4-hour here. You've got your hourly buildup here, and that was hit perfectly there. Goes through it, reverses it. But really, also, when you understand how the range is controlled, you're also seeing which reverse levels are being perfectly touched and executed every single time. Like, who would have used this reverse level and why? Well, there's a very, very specific reason why. Hourly to hourly, which is onset by the 4. And now you're in kind of like a 15-minute trail. So now you've got, doesn't that just go right back to the top side of this chart where we said, like, this is your 15-minute trail? So like, if you were taking longs, shouldn't they be on the hourly at the bottom and the 15 minutes of the shorts? And look, oh, sure, the 15-minute is perfect, and it's going right to the next 15-minute, and fine. So it's comboing the level, but regardless, it's still 15 to 15. And you've just defined this range down to such a point where you've been able to take this hourly at the top, and you've been able to build architecture off it to give you exact timeframes to buy and sell. Because you notice the thing we didn't do on the top side was go and say, like, here's a 4-hour level, let's look for hourly levels. Here's a whatever, a daily level, let's start building a trail on the bottom. Nope, we have what's protecting the range, and we have the perfect timeframes. Look, if the hourly is protecting the range, shouldn't you take the 15-minute short? Yeah, and it's perfect. And then shouldn't you just go to the hourly on the bottom? So like, isn't that literally prescribing your trade 1-to-1 right there? It's telling you 15-minute to hourly. Like, there's no mistaking this. As long as you read it properly, there's literally no mistaking this. Or maybe you're holding till this 15-minute here, but at the same time, you see the hourly hit and hold, and then it creates, a 15-minute time frame here. Get out on the 15-minute. Like, the 15-minute to 15-minute, and then take the next 15-minute to the 15-minute. Like, it's showing you, like, as long as you can see time frames, as long as you can understand ranges and how they're built, like I said, step through it, define the range, identify the time frame, and then build from there. And you've got your charts like perfectly aligned for every single time frame, which you should take these longs and shorts, and where the range breaks and how it's polarized. So when you understand ranges, it's really a deeper understanding of almost every single part of what timeframes are going to be hit. Like, you understand ranges and the way they really work in an advanced light, like what we're doing today. And you understand that, and you are given the timeframes you are supposed to buy. They are handed to you on a platter, because this is like almost comical how foreseeable this is, and how quickly we came to this conclusion and ripped this chart apart while teaching a lesson and finding perfect buy spots in a 30-minute span, where people would spend weeks on end trying to identify where to buy something. It's almost comical, because it can be so simple if you understand ranges.